is March 31st, and it's the last day of the month. It is also I'm losing track out here. I've been sitting at home for over 2 weeks. What is it? It's a Tuesday. It's a Tuesday, and after I take you through the account, I'm going to talk about where I think we are in this bubble popping phase, bear market, whatever you want to call it, situation that's going on right now. So I'm going to jump into the account. I'll show you one thing that I've done differently, as well as the margin proportion of the account that I've been kind of obsessed with over the last week, trying to deleverage a little bit. So here we go. I'm sitting at 58,000. Ignore that sound. I'm sitting at $58,101 right now. Minus 1.43% today. I was up as much as 3%, almost at 61,000, but unfortunately things turned around. I think the markets are acting like they don't know what's going on either. They're just frantic. I mean, things are going up and down randomly, seemingly randomly, and for no apparent reason. Uranium's rebounding kind of nicely and steadily, which is cool. I lightened up my position here on uranium a little bit on Cameco, but for the energy transfers bouncing back a little. But for the most part, it's very confusing. I'm trying to scoop up as many shares of Realty Income, which is stock symbol O, because I think it's pretty solid. These guys, the reason I like them so much is because what they do is they hold the buildings for businesses like 7-Eleven, Walgreens, things like that. And at least that's what I understand. And so I don't see these businesses going out of business anytime soon, even through this crisis. Everybody needs to go to Walgreens. And I've noticed that a lot of people go to 7-Eleven too, because it's convenience, a convenience store. And especially now that everybody's going to be getting a check from the government, they're probably going to spend it. Like the working class likes to shop there, just pick up a few things here and there, and they're widespread chains. So I think that they're still going to be in business, and they're going to do all right relative to everything else. So I don't feel that Royalty Income is actually going to take a big hit on this. It's not like some other REITs or real estate investment trusts or companies or holding companies where they may have to take a hit on their mortgage. I mean, on their whatever kind of contract they have, whether it's rental income or whatever, because their tenants are in distress. I don't think the tenants of Royalty Income are going to be in distress. So I think they will survive probably the best out of any other company in their league. And so I'm trying to really scoop up these shares. Of course, this is not financial investment advice. You guys should do your own due diligence and homework before you do anything in the markets. You could lose principal, and in fact, everything that you invest could go down to zero. Especially if you are investing in individual companies. So make sure you take that into consideration. All right. Don't invest any money you're not comfortable investing. But on the flip side, okay, that's something that a regulatory agency would like you to hear, and it's true. But on the flip side of this, you don't want to hold your money only in dollars either, especially now. All right, even though there's a big search for U.S. dollars globally, and a lot of dollar-denominated debt needs to be paid off and no way to pay it, so everybody's scrambling to liquidate assets and pay their bills. There, on the flip side of that, there's a huge amount of dollar bills being printed and given away, right? So you have all the extra unemployment insurance is going to be given away. You have all the stimulus checks that are going to be circulating through the economy pretty soon. You have so many dollars and the interest rates are at zero officially, right? You have all these programs that are buying corporate debts and things like that, and if these things go into default, the money is stuck out there circulating. It's extra dollars, USDs, that are circulating digitally or physically through the population, and that will bid up prices of things. especially since the supply is very limited right now. Nobody's working, so things aren't being produced. Okay, so which by the way is a big component of the recipe for something like hyperinflation. Now, personally, I've been through a hyperinflation, so I know what it was like. But and I started studying them because of that experience. If you're wondering, I was in Bulgaria during the years. Well, I grew up there, but I was there during the years of 95, 96, 97 when um, things really started getting out of control and prices were going up on a daily basis. Okay, so I know what it's like, lived through it, and when studying, I've came to stumbled on the this ingredient of a supply shock. Okay, so kind of like in Zimbabwe, I think it was like the farmers or something. They got their something confiscated. I don't know the details right now, but basically, the supply of the production was limited, and so government would try to print up money to make up for that. And so now you have a recipe for disaster, right? You have no production and you have an excess of units, monetary units, right? Which is exactly what's happening now. Okay, I'm not saying that U.S. is going to go hyperinflation, but I'm saying that it's going to be a lot of inflationary pressures. Okay, so we have limited supply, right? We have limited production. There's a huge supply shock and it's very sudden, and we have on the other side the printing of lots of units. Now, these two forces are going to fight each other, right? Zimbabwe was not a world reserve currency. Not a lot of people took much debt in Zimbabwean dollars that needed to be repaid, right? So that's not it's not exactly the same situation. So these two forces are going to fight against each other. Is the dollar black hole going to be bigger than the amount of money that the let's call it the government or the Federal Reserve puts into circulation, or the other way around? So that's the big question here. All right, now I went into a little bit of attention, but let's come back here to the account. One thing I have done is I have purchased a little bit of SDAO, which is a triple leveraged bear fund, okay, instrument that tracks the inverse of the gains of the Dow component, right? So basically, it moves up as the Dow moves down. And the reason I bought some of this, it's only $450 at the moment. I'm up about $6 on it. The reason I bought this is because I needed some kind of offsetting tool, because I noticed that during the first initial downturn of the markets, when the panic really set in, there wasn't really anything that's going up. Like, I don't want to put the money in the dollars because that's not going to be going up. It might go up relative to other currencies, but not really in real purchasing power. So I needed to do something to, that actually is going to appreciate and give me better than a neutral dollar position. Because if I just sit in dollars, that's going to decay. If I in the stock market, that's going down. If I'm in gold and precious metals, that's been going down for whatever reasons, right? Whether it's liquidation or whatever reasons, collateral reasons. If I put in bonds, well, bonds is acting really erratically, and although it's up, it's had really volatile and dramatic downturns. And if we're looking at the highest bond yields ever in history, this might be the top of this bull market. And I don't want to participate in the downside, because if you look at it all the way through from the 80s, that's a long downside, right? So I don't want to be in bonds either. I don't want to be in corporate debt. I don't want to, because that's obviously garbage right now. There's going to be a lot of defaults. I can't be in commodities, right? There's first of all, I don't even know. Maybe I should buy just futures of commodities or something like that, but I am in silver, which kind of follows that, but even silver has been getting hit, and so it's tough. I do have a little bit of Rio Tinto, things like that, for some basic materials, but in general, everything's been going down, even those things, and there's really no place to hide. It's just the extreme devaluation of everything out there, every kind of type of asset. And so this is probably the only little thing that will kind of go inverse of everything that I've mentioned. Okay, and it'll give you a dollar value that's higher than just sitting in dollars, right? But I did make a whole video warning people about triple X leveraged funds and not to hold them for a very long time. So, I don't plan on holding this for a very long time. Okay? Because, long term it's going to look something like this. So even though it's gone from 34 to as much as 83 and now it's at 50, it's never going back to 361. Okay, that's never going to happen. All right, no matter how many times, like even if the market drops down by 50% from here, it's still not going to go to these levels. Okay, so these funds are very dangerous and they lose a lot of money over time. So please don't hold them for more than like 6 months or a year at the most. So make sure you're aware of how exactly beta decay works and read up on the technicality of these funds before you actually put any money into it. It's pretty dangerous. So if you want to know more, you can watch the video that I made about leveraged funds. But that's the big difference right now in the account is I have this. And also I've consolidated some of the silver position. I got rid of Metalla silver and Matrix silver, and I just put a little bit more into SIL and Wheaton Precious Metals. SIL is the silver miners ETF, exchange traded fund, which tracks the performance of some of the bigger silver miners out there. And this is what the performance looks like over the past 5 years. All right, so that's it. This is the deal. I mean, it's an interesting period of time, right? A lot of companies are shifting production to like medical supplies and everything like that. It really feels like a wartime period where, a lot of businesses, private sector businesses and public, I guess, they're trying to, well, you can't have public business, but you know what I mean. Like governments and private businesses are kind of trying to partner together and take care of everybody that's sick and everybody that's down on their luck. So it's a very unique circumstance. I haven't personally lived through a pandemic like this before, and I don't think any of you have either. I think the last one we had that's this major was back in 1918. So it's tough to know what to expect. And apparently, it's very lethal, not just to people, but to economic activity as well. Especially the panic that is a result of the sickness and the measures that people have to take in order to mitigate the impact of the sickness. Okay, it's very damaging. It's probably even more damaging than a war, right? Because during wartime, you could still go outside. I mean, it's risky. You might get bombed or whatever, but especially if you're in the U.S., there weren't many attacks directly on U.S. soil. So, besides Hawaii and stuff like that, and islands, but mainland U.S. I don't think has ever been touched during the World Wars, and so economic activity here is kept going, even if much of the resources had to be siphoned off into the production of war machines of sorts, airplanes, military vehicles and boats, ships, whatever. So at least you had kind of an idea of what was being taken away. During this freeze, the uncertainty is so high, right? You have no idea what kind of impact, okay? You have no idea, like, when this thing is gonna finish, how much it's taken away from your pocket. I mean, like if you were a business back then, even if you had 90% of your resources siphoned off, you at least knew that you have 10% coming in to do whatever, right? To whether pay employees or buy materials or whatever it is, things were still functioning. Whereas now, some businesses, many of them, most of them, have 100% decrease in revenue, right? Like it's wiped out, it's gone. So basically, the U.S. has been turned into like some kind of a third world country. Um, it's pretty brutal. I mean, I understand that we're lucky. I think that a lot of the businesses have actually been moving online, where people don't have to have physical contact to to do trades with each other. Like the internet's kind of a little bit of a savior in this case, because without it, it'd be really really tough to do anything in the world right now. At least we still have programmers and software developers and whatnot, and everybody in technology that's working on this is great, or anybody video conferencing and everything that like that, and internet communications and video, file sharing, and people are still able to exchange ideas and trade thoughts out there in the virtual space and still be productive and still add value to society. But I'm pretty bearish, over the next 6 months, even though my 6 months to even longer, because it might be a while until people start to kind of restart their thinking about social contact physically, right? And I understand that this is contradicting my account a little bit, and the reason why it's contradicting my positioning is because of the amounts of liquidity, right? So I'm basing my account on the fact that infinite money, right? Well, let's not say money, right? Infinite units, monetary units, um, infinite currency, infinite US dollars is greater than zero production or near zero production, right? So, um, historically during hyperinflations, markets have been, they have been kind of a safe haven, stocks, because they're the only entities that actually have cash flow here, right? I mean, it's pretty brutal. This is the all-time chart here. You can see how I reached almost $89,000 and now back to sub 60. This is the 1 year chart. This is the 3 month chart here. Negative 32%. 1 month. Negative 28. And if we take a look at the S&P 500 here, we'll see that 5 year, this is what it looks like. 1 year in the red, 11%. 3 months minus 21. So I'm doing significantly worse than the market, but it's because I'm leveraged, right? It's because I have a more aggressive stance. And if the money printing resumes, continues to full blast, then I expect my account to do better than the market. But obviously, we'll see. So one thing I have been trying to do, like I mentioned earlier, is I've been trying to deleverage a little bit. So here's what it looks like right now. Even though I've been selling things off, I'm still at around 28% margin used because my account value is going down from about 86 to 81. If my stock value goes back up to 86, this percent would be lower here. And it will increase quite dramatically if we have another big correction from here on, right? So if it goes down another 20%, then the margin total will go up to like 60%. Okay, it'll be quite big. So hopefully there isn't another 20% downside, because I'm counting on the people who are creating the currency to do it in such a big, that's my prediction anyway, to do it in such a big way in order to, even though real value is taken away from the markets, the nominal value will stay intact or grow slowly, over the next 6 months, a year or two, and beyond. That's my expectation. Okay, so that's why I have these silver bets, because they're very sensitive to, big inflationary pressures, and that's why I still have a lot of stocks. That's why I have Energy Transfer. I have the Russian market. I think that this huge cut in oil prices is going to recover eventually. So you can see how, even though I'm very bearish on the economy, I'm slightly bullish on the market long term. and I'm bullish on silver medium term till next year, um, or maybe a year and a half from now. And I'm also bullish on specific names, like Apple, which I think will survive, even though there still might be a big correction for Apple to come. I think they will survive this disaster. I mean, a lot of the Apple products are social distancing products, right? The phone is basically a requirement if you're going to be away from people. Not only is the phone a requirement, but everything, right? They're content producers now. They're starting to monetize. I have a whole video on Apple, how they're starting to now monetize their consumer base. And I think the outlook for Apple is pretty good long term. So I have a lot of that. And also in the medium term as well. I have one call option on Apple that expires next, I think, June 2021. So we'll see if the price of Apple is over 300 by then. I think it will be. But you never know. I want to buy more Apple calls, actually. So if there is a decrease in the market here in Apple, especially if it takes like a 20-30% hit, even smaller, I think I'll pull out some more calls on Apple. All right, look, I've talked a lot. It's been 21 minutes now. I think I've said all I got to say for today. Deleveraging the account, and I talked a little about my outlook and everything else. So what would the word of today be? Okay, if you managed to go through this entire 2-minute video, let me know that you listened all the way through so I know who you are by typing the word hyper in the comment section. You know what that stands for. All right, peace out.